Looking at 2019, the supply-demand part of the apartment industry is going to remain very favorable in our view, mainly because job growth seems to be keeping a very strong pace. The economy is on strong footing, and the consumers continue to prefer the rental market over buying homes. Clearly, that's showing up in the numbers. And because of those facts alone, we're expecting a solid year in 2019 from a supply and demand perspective.
I think apartment investment in 2019 will continue to be in line with previous years. Construction deliveries are going to be at an all-time high. Construction loans are going to be coming due from deals built over the last 2 to 3 years, and that will make for very many buying opportunities going forward.
I think 2019 is going to be very similar to 2018. I think we have a tremendous amount of capital interested in investing, both debt capital and equity capital, and trying to find places to put their money, understanding how strong the multifamily industry is as a sector within real estate, and preferred by many investors. So I think we'll see strong continued investment interest.
So it looks robust, and actually this conference is a great leading indicator as we're only in the beginning of the year. We did a poll of our investment advisors and our mortgage bankers, and interestingly enough, at the end of the year, they said they felt that it looked like 2019 was going to be another good year. We asked them the same question a year ago, and they were actually bullish, even though pretty much we knew there were 4 interest rate hikes coming. The industry walked straight through those 4 hikes, and probably with 2 hikes this year, it looks like the industry is ready for it again. There may be a lot of the players out there are willing to take the slightly lesser returns. Cap rates have not really been affected by it. So it's actually, again, this industry is very resilient, and it looks like another good year.
We think that 2019 still looks like a solid year, some good growth in the economy, some strong demand, but a lot of capital out there, so competition for individual deals.
I think the market's actually, the outlook's pretty good. Employment's really in good shape. The economy is growing nicely with job formation. Not necessarily at the pace it was we expected in 2018. It'll be a bit slower in 2019, but still quite good. And what that means is there's adequate demand. When you look at supply at 300,000 units a year is roughly in check, and certainly there's only kind of localized oversupply in a few cities, even over the next couple of years. So generally, it's a great market.
So for Capital One, we're expecting 2019 to be pretty similar to 2018. We're heading into the year with pretty robust activity. However, with rising rates, we're kind of expecting a little bit of a slowdown or compression in cap rates.
So we start with insatiable demand for apartments from a renter perspective. Capital demands apartments. These are positives for the market. I think the negatives are the headwinds in terms of cost, both in construction cost and operating expenses. So on net, we see it more challenging for deals to be made. So for us, we probably expect to work harder to do the same amount of business as deals are more difficult to pencil and be structured.
So in this year, I don't think that we're going to find much differences than last year. There's a ton of capital chasing the market again. A lot of people don't realize that Inland in its 50-year history was founded on apartments. We're using those old ties to find the deals that we're converting on in 2019. We bought about $800 million in apartments last year, and that's the same goal we have for this year. I think the competitive landscape will allow us to do it. We're just going to have to dig deeper under the rocks to dig those deals up and get them closed.